Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. All right, we're back. How you doing, Paul? You're looking a little red, man.
Yeah, I got a lot of sun over the weekend, celebrating the 4th of July. We were on the boat the whole weekend, so yeah, I'm not a big sunscreen person, so maybe that's bad. I don't know.
I don't know. It's kind of a toss-up. It's like, do you put chemicals on your face and let the sun bake it into your skin, or do you just go au naturel and suffer the sun damage?
Yeah, I usually will put a little bit on the nose, but I missed one day and it got me. It's a big target, so.
Yeah, I do the nose and the ears, and then the back of the neck.
Yes.
Man, that tans up like nothing else.
Oh yeah.
Then you take your shirt off and
it's dark.
yeah. Well, it rained here on the 4th, so they canceled all the fireworks around town. So I think like over the next month, all the little cities around town are doing their fireworks at some point over the next month. So we got a lot of firework opportunities cool. still coming. So, yep. But yeah, it was a good week, man. It's kind of strange when that holiday falls on a Thursday. Most people just kind of shut down for the week, I think.
Yeah, we like we said in the last episode, we were staying we stayed at the Watergate. I don't know if that episode's come out yet, but stayed at the Watergate Hotel, read the history about it, kind of cool, and then we walked like 5 minutes to the fireworks at the Kennedy Center so we could see the DC fireworks.
Oh yeah, that's cool.
So anyway, yeah, it's good.
Nice, man. Well, hey, let's get into it. We've got a question to start with, right?
Yeah, we do. This is one of our loyal listeners and frequent posters on Facebook. I won't read his last name. His first name is Anthony, but he had a comment, and he said, "Hey, gentlemen, as always, very enjoyable content and conversation. Can you guys do an episode on what to do with a windfall, such as an inheritance, property, or business sale? It would be great to have a conversation about one's options using IBC, opening up another policy versus paying the loans on existing ones, use of a premium deposit fund to fund a policy. In our family, windfalls are likely, and it would be great to get your take on this." So, Anthony, thank you for the comment. And so, episode 82, we have a lot of that content already there. That's from, gosh, was that a 2023 episode? It was a while ago.
I mean, that's like 40 weeks ago.
Yeah.
40 something weeks. Yeah. 45 weeks ago. Yeah.
So we did, but I would say generally speaking, you've covered what one could do if we're talking from an IBC lens. And I think, that's a conversation we would want to have when the time comes, or, maybe even ahead of time, so that you can, because it's just going to depend. And I'm facing that sort of, I know Dave and I are both kind of facing that prospect as well, with some windfall money. So, but yeah, it depends. The banker can do whatever he wants.
What are your goals? Yeah. What are you looking to do? Do you want liquidity with all of that cash? Do you want to, like, maybe based on your age, if you're getting close to retirement, maybe you want to put that away into something guaranteed and safe, like the PDF, the premium deposit fund with a company.
Yeah.
Or maybe you want to put it to work, purchasing an income producing asset, and you use that money to fund a new policy for yourself. So many different ways to do it.
Tons of different ways to suck the egg. I do like the idea, though, generally speaking, of new premium being created with new windfall dollars.
Yeah.
I think I would prioritize, and again, it depends, but I would attempt to prioritize new premium dollars over policy loan repayment. And again, but that just depends on your particular situation.
Sure. I mean, it does feel really good to repay policy loans.
Yeah,
fill those back up, man. It feels good, doesn't it?
Got them all filled up now, so
Yeah.
I'll be hitting retirement very liquid.
Yep. Which is a good
Very
time. I think a
liquid.
lot of people are holding real tight to their capital right now because of so many unknowns over the next several months.
Right. You got an election coming up. Got dogs and cats living together. You got mass hysteria.
Our pets' heads are falling off.
I'm pretty sure there was 100 and I don't know. I heard the stat. There was 119 shootings in Chicago this weekend
Oh,
or
I
something
mean,
like that.
probably pretty light for a July 4th weekend, huh? It was a long
19,
weekend.
19 killed.
It's like a 4-day weekend, so they get double the opportunity out there. Yeah.
It's crazy. Anyway,
Yeah.
so heard that on the news. It's bad.
Yeah.
So
Well,
anyway, Anthony, bottom line, yeah, if we need to have a conversation, let's have it. But sounds like you're in a great position. You've listed your options, so you're
yeah.
I think you're well equipped to handle it, regardless of what you decide.
Yep. But check out episode 82 if it's not listed like numbered like that on some of these platforms. It's called When to Start the Next Policy and Preparing for a Windfall. That's from September 4th, 23.
There you go.
Cool.
Perfect.
All right. Well, so we spent a lot of time talking about infinite banking and countering the objections of infinite banking. And some of those include objections to whole life insurance, but we wanted to have just a discussion about, common objections to just life insurance in general and what we've heard over the years of doing this and introducing this to people. And maybe they like the concept of, oh, becoming your own banker, infinite banking, uninterrupted compounding, controlling your capital. And then you mentioned life insurance and you hear the screech and they're like, hold up, what'd you say? Nah, I don't need that. And here's a list of all the objections that we'll go through and talk about what we think of those objections. So what's the first one of the very first is it's kind of a mix. It's, oh, that's too expensive or I don't have the money. And usually people
Right.
they want to say, because they know if they say it's too expensive, oh, well, somebody else can talk you out of it being too expensive. But if you say, I don't have the money, then the conversation's over. So what would you say to somebody who says, I don't have the money for that?
I would say, well, we need to go find the money because it's probably there. And maybe did you really need that new car, or did you really need to pay for that $1,000 a month private trainer? I mean, I don't know. Maybe you did need those things, but the money's probably there.
Right.
I know when I was a child, if there wasn't enough money, dad went out and got a third job, and that's just the way it was. So the money can be found generally in people's not having to do any of that, but just reshuffling some things. It's priorities, right? We
It
need to
is.
prioritize our future, right? Instead
Right.
of
You
our
found the money
present.
for that vacation you couldn't afford. You found the money for that car. You found the money for, whatever that new watch that you wanted. So you can find the money. The money's there.
Right.
So, and then we're also talking about solving a problem. That problem is needing cash for your family at the time when they need it most, when you, the breadwinner, are gone and no longer are producing an income for the family. So if you can't solve that problem today with pennies, your family's going to have to solve that problem later on with dollars.
Right.
So
And
you
they're not going
really,
to be able to do it.
and they're not going to be able to do it. It's going to be
Right.
very difficult to replace you, and you are the income producing machine for your family.
Yep.
Replacing
And
you is going to be very, very difficult.
when this happens, I flew back from Florida a couple weeks ago, and it was one of those flights where you're just sitting next to two of the right people. One, 30-year-old kid, and then one 69-year-old woman who was a widow. And she'd been a widow for over 20 years. Husband died at age 45 from, I think, it was some sort of cancer.
Well,
But we got into talking about what I did and what I was doing with whole life insurance and the infinite banking concept and stuff. And she was just amazed, and she was like, we didn't even have term,
yeah,
right? And here she is, 69 years old. She's still employed because she she had to, all this, they had 2 kids, and she had to, she became the breadwinner overnight.
Yeah.
So anyway, these things do happen, right? We need to underwrite, we're underwriting, we'll get into this, but we're going to underwrite time. And young people, they think they've got, forever, right? Like, I don't need that. I don't have any kids yet, or I'm a single dude, or whatever. And I get it. That is the the dominant attitude that young people will have, is just, hey, I'm going to live forever.
Right.
And children aren't even legacy's not even something I'm thinking about. And of course, separate from IBC, I get it. You overlay IBC, obviously, that the conversation changes, but anyway, yeah. So no one ever dies at the right time, I guess, is the point I'd like to make.
No, I was just
right.
texting with my buddies today, and he's like, man, this 1-star general I worked with just got killed by a hit and run accident. He was strapping something to his truck that fell off while he was on the road, and a driver turned out to be an 81-year-old elderly man, struck him and then drove off, and he died in front of his 15-year-old son. So it's like, yeah, nobody dies at the right time. So yeah, it's tragic, but you can make it much less traumatic for the family if they've got the financial means to carry on with that lifestyle that you would plan to give them with all that time you had remaining.
Yeah, we want it to be as seamless as possible, right? They're going to have enough things to worry about on the emotional side.
Yeah.
Forget the finances. The finances are going to be a struggle. So again, if somebody needs, and especially when we're young, we need time to build ourselves out, whether it's our business or our investment portfolio, whatever you were planning on leaving, you better have underwritten that now while you're healthy, while you're still alive, so that you guarantee that your loved ones who are left behind are going to get it when you walk out, right? So
yeah,
that's the whole idea. And we don't talk about this enough. We're always focused on the cash value and the process of IBC, but just the general need for life insurance. And this could be a term policy as well, couldn't it, Dave? Like, if you didn't believe in whole life right out of the gate, you're more than likely anyway, because you don't have the money, you're gonna have to supplement with term anyway, which is just fine.
Right, which is fine. And it also alludes to the misconception that you need to have a lot of money to do this. Nelson didn't say pay a whole lot of premium. He said pay significant premium relative to your income.
That's right.
So
that's right.
5,000 for one person might be significant, where 50,000 to another might not even be significant based on how much they make. So
yes, and you've often pointed out on the podcast as just a general theme that, hey, aren't you going to make more money every year? Aren't you going to increase your means as you age? And I think there's some stat out there like our most productive time is in our 50s.
Yeah, your 50s, like half the population enters that top 10% income bracket at some point in their life, and it's typically in their 50s.
In their 50s, right?
Yeah.
So yeah, you likely will make more money, and if that's not your goal, then well,
yeah, get a new goal. Yeah.
Yeah, just add that to the list. Hey, make more money. That's a good, simple,
that should be
achievable goal.
Should be a given. Yeah. But that leads into one of the next objections, which is I already have enough insurance. People would be like, oh, I've already got plenty of insurance through the company. I've got 2 years worth of salary, or even I've got $1 million. That's plenty of insurance. Well, if you're 30 or maybe even 40 and you got $1 million of insurance, maybe that would replace your income today. Is it going to replace your income 5 years from now, or your lifestyle 5 years, 10 years, 20 years from now? Probably not.
Yes, this always comes up early in the process too, and from an IBC perspective, it's like the wrong, I always get the question, how much is $1 million of life insurance? Well, that's the wrong question, because we're really concerned about, we are concerned about the death benefit that you have across all sources, but we're also, going to reverse engineer this from what is your ability to pay premium, right? Mm-hmm. That's how we design these policies. It's a premium, in my mind, it's a premium amount first, and then I see what it spits out, and then I can make other plans for you. We're going to supplement with term to get you your full human life value. Dave and I are both big on getting to your full human life value as close as possible. The goal should be as that 40-year-old guy to have 25x his income.
Yeah.
In death benefit across all sources. That could be employer, that could be term, and dividend paying whole life, right? All sources. When they say that, like, I have enough insurance, or like, what is, we don't encounter that much, but what does that mean?
Enough for what? Have you sat down to think about it? So what kind of life were you planning to give your family? Were you planning through your working years to pay off your home, to send your kids to college, to take vacations every year with the family, to plan to save for and invest for retirement? Like, how much? Add all of that up. What does that come to?
Yep.
Do you have
Purchase
enough for
vehicles,
that?
replace vehicles.
Yeah.
That's going to happen
And
several times.
enough to live on. Food, shelter, clothing, all of that. When you add all of that up, does it come close to how much life insurance you have right now? I'd say
I think
most people, the answer is, resoundingly no.
No. And I think there's too much of that needs analysis stuff still around, and that might be the traditional life insurance, this is how much you need. And it's like, it pays off the mortgage and does this and that. It's missing a lot. We're replacing your income. That's what we're replacing. Your future income. As much of it as possible. So, yeah. Anyway, this is aggravating to me. Just and maybe I was guilty of it at one point too, because certainly before I discovered the infinite banking concept, I was way underinsured. But in my mind, I was like, oh my gosh, I'm just throwing this money down the toilet.
Yeah.
Right?
Yeah.
Oh my goodness.
I spoke to somebody today and I showed him how cheap whole life insurance is compared to term life insurance. He got a 20-year term policy at 60 years old for $1 million. Takes him to 80. Well,
Wow.
that's costing $600 a year. That's over $130,000 he'll pay.
Oh, it's a tiny policy then. No, it's $1 million.
$1 million, $600 a term, $600 a month.
A month, okay.
Yeah, that'll take him all the way to 80 years old. So it's very, very expensive. Right, that's $7,200 per year, paying it for 20 years. You're talking over $140,000 that he'll never get back.
Is it convertible term or just vanilla?
That I don't know, because what we're doing is designing a whole life insurance.
Cheap.
Well, we're designing a whole life policy to make sure he always has $1 million, and that whole life policy right from the get-go.
Yep.
Which of course the premium is significant relative to his income right now, but he gets all that money back in cash value. Before he even hits RMD age, where he has to, require minimum distributions from his 401k. So I extrapolated that. I said, well, when we go all the way out to age 80, what this policy actually costed you in the upfront cost over the first few years of the policy came out to $165 a month, as opposed to $600 a month for the term with the same death benefit.
I don't often show people that, because there is it's really a misnomer that whole life is more expensive. Actuarially, they're the same price.
Sure.
Whole life is just you could look at it as a permanent term, and it's priced appropriately because it will pay a death benefit.
And the great thing about it is you're going to get your money back one way or another.
That's right.
Like, if you say you don't need it, well, as long as you've had it for long enough, you're going to have enough cash value in there, as much as you've ever paid in premium, so you can get all your money back. But if you die before that, you're going to get a whole lot more back. Your family is. So you're going to get your money back from this policy one way or another.
It's nice to see that, I've got a couple of clients that went through underwriting in their 60s and quite easily, in fact. So it's still possible. Is the cost of the death benefit more expensive? Yes, but it still makes sense to do. So if you're one of those people that, I talk to people in their 50s and they're like, I'm too old. And I'm just like, no, no, you're not. Especially from an infinite banking concept perspective.
Yeah.
It's really no different. I had a,
Right. You just design it differently and it can create the same function
yep,
and provide you that permanent death benefit. So,
yep,
yeah, 60 is not too old. This guy is 62, going on 63.
yeah. I think that's my oldest is 62
Yeah.
at underwriting. So,
Yeah.
um, yeah,
Yeah. All right. Well, how about here's a very common one amongst the typical American is, well,
sure.
I prefer the stock market because I want to get a better return on investment. Life insurance is a terrible investment.
Yeah.
So,
Well, life insurance is not an investment.
right.
You're not investing in life insurance. And again, we're talking about dividend paying whole life, not like variable life or some of that other stuff out there. But we're paying premium to the life insurance company in a private unilateral contract. Um, so I'm with these people, like, but they're looking at it as like a this or that
Right.
choice, right? I can, and I've said this before, and I don't, and I've got some friends that I haven't been able to really convince. They're mildly interested or not interested at all, and reading the material, reading Nelson, whatever. That this is somehow in their mind. Maybe they don't think this, but maybe they do. That Tammy and I only pay whole life insurance premium. That's all we do with our money,
Yeah.
and that couldn't be farther from the truth.
That's the
But
first thing
they
you
don't.
do with your money.
It's the first thing I do with my money. Money hits the checking account, and then 7 different whole life premiums throughout the year is where we store that money, that savings, right? And
Yeah.
then from there, so it's a sequence thing. And then from there, we talked about it. I financed the construction loan down payment with policy loans, literally 100% policy loans. Just pay those all back too.
Nice.
And now I'm just, like I said at the beginning, I'm just sitting on cash right now, but because I think it's a good time to do that. But our money's going to go do other things. It can invest in the stock market. I've got clients that have, giant brokerages that are all dividend stocks, and they pay their
Yeah.
PUA with the dividends from those every year. You could do whatever you want. You invest in real estate, great. You want to do some private equity or private placement or private lending or whatever you want to do, go do those things. It's just a sequence thing. It's the
Yeah.
same thing.
It is. And another conversation I've had with somebody recently is that your whole life policy, your IBC policy, that cash value actually gives you the freedom to be more aggressive with your stock investing during retirement years. Usually, you hit retirement and the portfolio manager adjusts the ratio. They do a lot more fixed income versus equities. Well, now if you want to in a bull market, you have the permission now to be more aggressive with those investments because you have your guaranteed cash over here that's not going to fluctuate. It's not going to be reduced based on a poor market performance. So you've always got that to fall back on, gives you the license to spend more in retirement because it's all going to be replenished when you graduate. And it gives you the license to be more aggressive with your investing if that's what you choose to do.
Yep. In the last episode, was Monday's episode the one that came out with Ryan?
Yep.
It was, right? Yeah. So,
Yep.
Ryan talked about sequence of returns, risk, and how, owning guaranteed whole life insurance, you can help, mitigate that by, hey, I'm not gonna take from this taxable bucket over here that was maybe 401k dollars or brokerage dollars, whatever it may be. Because the market's down, I'm gonna pull from this tax-free bucket via the policy loan feature because I've been paying adequate premium for a long period of time. So yeah, and then you nailed it. That license to spend your other assets, or to even get a little bit more creative with those other assets. Maybe there's something else you'd like to do with the assets that you've accumulated over your working life. So I'd rather not have to do any of that, but that's just
Yeah.
me.
But I mean, how nice is that? Though you have the ability while you and your spouse are both alive and living the golden years in retirement, you have the permission to really spin those assets down and just enjoy it to the fullest, knowing that as soon as you're gone, your wife's going to be replenished or The other way around, or both of you have policies. So each of you are going to be replenished with income tax-free death benefit to make up for all the money you just spent during retirement.
Yeah, I've heard some other people, throw out some numbers on what they're going to leave behind, and I guess that's in today's dollars. I don't know if they were thinking like 40 years from now when they graduate, or 30 years from now when they graduate, and I was like, well, how do you know that?
Right.
How do you know that let's say it was $1.5 million. Let's say that million, like, how do you know that $1.5 million that you're anticipating having 30 years down the road is going to be there? How do you know that? Maybe you had to spend it on some unforeseen medical expense, or whatever. Stuff happens, folks, right? It does. Despite what Dave Ramsey says and everybody else, right? Things do happen. So I hope that is true for his children. I hope that does come to fruition. But why not have a guaranteed way to say that I'm going to leave $1.5 million?
Yeah, guaranteed.
Okay. Guaranteed.
No matter
without
what
tax.
Yeah. Right.
Without
no matter
a 10-year window to do this or a 5-year window to do that. Like, that sounds super annoying.
Yeah.
So anyway.
Yeah. Nope. And you have the stock market is where money goes to make money.
Yes.
Life insurance creates money where none existed before. How cool is that? Life insurance is the only tool that creates money legally. Other than the Federal Reserve printers, life insurance creates money.
Right. They're just counterfeiting money. So you and I create money. We help people create money.
We create cash where none existed before. Yeah. I haven't had any clients that have graduated yet. I'm sure that's a long ways off. I'm sure it'll happen. But when that does happen and that person graduates, I'm going to be able to walk in with cash.
Right.
Where none existed before. Here you go. So
pure gold.
Yeah. Hey, thanks for listening to part 1 of this episode. We'll be back next week with part 2, some more common objections to whole life insurance, and we'll be rebutting those. It'll be a fun episode. So until then, control your capital, or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.